Hey everyone, this is Saturday the 8th of September 2012. This is another market maker method trade as taught by Martin at learningtotrade.com. This one was actually done on Friday. It was the British pound US dollar. So this is what we had from Thursday the 6th. I know that some people were in long here on this move as well, which was another trade. Yeah, you can see market maker accumulation. Market makers entered the market, then driven down. Notice it was driven down around about 45 points. Pops out some stops from anybody who's kind of long in this area, and they have stops under here. Notice there was no real stop taking upside. Yeah, pops in resistance. Get your jump bar up here. Away you go. Some people would just take it straight on there. Others like to wait for a retrace, which you would have got from here back down to resistance, and then trade it up. So I hadn't quite made it by the time I'd gotten to look in the morning. It was 8:15 there, but yeah, it looked pretty good for making it all the way. The story looked correct. So just let this play on. Yeah, next bar 8:30 till 8:45, makes 90 pips to the top. So at that point I was looking for the market makers to set things up again, to do their accumulation, manipulation, profit release. So you can see, I'm just going to switch the volume on here as well. You see, it started to get a bit more volume as it came above here as well. So see how we go, a bit of fading up. Just kind of pause around. I know that some of you like to trade these 45 pip moves back down. I myself am not as proficient as certainly Nicky is at them, so I tend to like to wait for the very clear setups or 90 pip runs, just the way I like to do it. So we're starting to get this little bit of action here. Popped on resistance straight away. That was about 12 o'clock that finished. So we have aware of this accumulation here as well. Some green intent lurking about, back on resistance, picking up a little bit of volume as well, so that certainly had my attention. And as the next bar came in, we had market maker activity. So now we need to start looking for what's going on. And straight away we had a jump bar away from resistance. Now to me that's a bit like that trampoline effect, where often you can get just running straight back up again. So I was happy at that point to get in on the market as that closed. 36, I think I was filled at 33, and yeah, just I'd put a 20-point stop on it, and yeah, see where we go. I was happy that things were all set up there for a move up, certainly to the 45 line, if not maybe further. So you can see it comes back to resistance again as well, but then bounces right off it again. So another entry point if you wanted to, if you've seen that market maker activity in the jump bar, put on a retrace and you would get in at an even better fill. A really small stop loss under here if it happens just to keep on drifting down. If you do look back as well, by the way, there's no clear stop take for thinking this was 90 pips going down. If you looking back, there's nothing there that makes any sense. You have to look real far back. So yeah, so also what you might notice on the 60 minute, which is always worthwhile paying attention to, so there was that move up. This is it fading back down. So you see how that's a little, what facade traders would call swing point. Where would they put stops if they'd gone long here? Would be under here, and it just nibbled through there and no more. And that corresponding with the resistance block, which is coming from here. There was also the high volume from another day. It didn't quite make that one, but it certainly picked up that high volume from 2 days ago. Anyway, so let's step this on. So there you go, and then just totally takes off. I wasn't paying any attention to news and stuff, but it was only later on you know, in the evening someone had mentioned to me that it was non-farm payroll day, but I say I don't really follow news and don't really care about it. I just trade what's in front of me. And off we go. A little bit of fading there, but it's still cracking on up, and pretty much there you go. There's your target hit, 90 pips. As simple as you get, really. It's a real sort of easy trade, that, I think. It was a bit more difficult, I found, on the euro. I think I then just continued on. Yeah, euro was I wasn't in that at all. That's what really happened with the euro. You can see I was waiting for market maker activity, pay a bit of attention, because I know we'd had this 90 pip move up, which you know, again was pretty similar. You know, your 90 pip move down, stop taking resistance bars, jump bar up, and away it went, and it just carried on after that as well. But for me, I don't see anything there that would make me want to think that was just going to continue up like it did. There's no market maker activity being signalled. There's the accumulation here. You know, you could be fooled into thinking maybe that once it done the 90 pip move, that this punch up here was accumulation of sales, but that's not the case. So wasn't making sense to me, which is why I stayed out of it. And yeah, just, you know, I was happy with my British pound trade instead. So yeah, then my usual exit was up here, about 4 points off of there. So yeah, what we're talking, 64 and 64 and 71 pips up, which is nice to end the week. That's it, guys. Have a good weekend, and I'll see you all next week.